Adam Posen is the president of the Peterson Institute for International Economics. He was also on the Bank of England's Monetary Policy Committee, and he joins me now from Washington. Great to have you with us today.
Thank you for having me, Allison.
Let's talk about this announcement. I mean, as much as Joe Biden kind of dragged his feet on making the announcement, not too much shock value. But I want to hear how you characterize the renomination, especially as how it's being absorbed by the market.
Well, as you said, this is not a surprise, and that's good, not just because you don't want to casually surprise markets, but more importantly, this is a full-throated endorsement of what's been a very successful monetary policy for the last several years, and one that Governor Brainerd has fully supported. There's no real distance between Chair Powell and I hope to be soon Vice Chair Brainerd on monetary policy, and the president was right to endorse continuing that.
No divide between them, but certainly a divide between President Biden and progressives like Elizabeth Warren. The senator certainly had a say in who should lead the Federal Reserve. She publicly criticized Powell, saying he was a dangerous man to head up the Fed. So how did Powell become a safe pick for Biden then?
I think you're right to point that out. Senator Warren most loudly, but a few others were opposed. But it wasn't about monetary policy. It was about financial supervision, particularly bank supervision. And to a lesser degree, it was about climate. And on these issues, I think President Biden would have been fine with either choice. But it's important not to lose sight of the plot. Senator Warren, has claimed that the Powell previous Fed went soft on banks. They probably went easier than she would have liked on bank mergers, approving them quickly. But in reality, the banks suffered a pair of major shocks over the last couple of years and reacted the way they should. They drew down their capital buffers and kept lending to the real economy. I think where Senator Warren and I hope Vice Chair Brainerd will turn their attention is to the non-bank financial intermediaries and crypto and places where there's genuine risks.
And inflation is also on their radar because this renomination is happening at a critical time, not just for the market, but for the economy. And, we're seeing bond purchases already being pared back, but interest rate hikes are another matter. Most Fed officials have said that they won't consider raising rates, at least until the tapering winds down. Do you think that's a mistake? Should Powell move faster? I mean, even the market is looking for a faster timeline for rate hikes.
It's a fair question, and because monetary policy is approximately right, it's not an easy call. If we were totally wrong or had some crazy shock like a year and a half, 2 years ago, then you would know which direction to go. But within that, I would feel strongly they can wait until June or July, meaning after the tapering, to start hiking rates. Probably what's going to happen is we're going to see a decline in inflation temporarily in the next few months. But that doesn't tell us anything about the underlying trend. And I think the underlying trend is up. And so they will have to look at raising rates come the summer. But it doesn't have to be immediate.
Okay, Adam Posen, thanks so much for your perspective today.
Thank you for having me.